Welcome to another episode of the Lightspeed Investing Podcast. We've got Nicole from Mac Capital back again. She's here to share with us why her company is so successful and unveil the most important strategies that she thinks will be very beneficial for you guys to hear about. So, Nicole, thank you so much for hopping on again. I know you are an avid traveler. So, where are you joining us today?
So today I am back in Scottsdale. I did have quite the travel just recently. I spent a few days in Vegas over the weekend. I'm not a gambler, drinker, or anything like that, but there was an important meeting that a partner of mine had wanted to have there, and so I accompanied him for that. I was just in Washington. I'll be heading back there probably in a couple days for the 4th.
Oh, Washington, like the state?
That's right.
Okay, awesome. Whereabouts specifically? My sister is a child neurologist around Tacoma.
Oh, that's so cool. Yeah, Tacoma's great. I grew up in a small city called Sammamish. It's actually grown quite a bit now.
Hmm.
At the time when my parents moved in, it was still considered Redmond, which is the headquarters of Microsoft. And that's kind of where I go home to. There's a beautiful lake
Oh, I see.
this time of year. Yeah.
Awesome. So you're going to be setting off fireworks on the water,
Oh,
huh?
yeah, that's the goal. That's the goal on a
Yeah, that's a very
boat.
neutralizing a blend of celebration. So let's get into it. I think you have several strategies that you want to unveil, right, for our audience today that makes Mac Capital so successful. Now, just in case they did not know, right, you want to kind of fill them in really quick. Exactly does Mac Capital do or invest in? And then we can go into the strategies.
Yeah, so primarily we invest in industrial real estate, and we're a private investment firm. We've done industrial, we've done some other things before in the past as well, but that's our primary investment strategy. We're considered a syndication because we pool investor capital together in order to have equity for these assets, which is mutually beneficial because we have a full in-house team that does all the due diligence and the hard and heavy lifting that folks would typically have to do themselves if they were to go out and buy the real estate on their own, right? So we take accredited investors, and yeah, we've grown to 1.3 plus billion dollars. And we are focused on, single tenant, absolute triple net sale leaseback, and which we can get into what that means in a little bit when we talk about strategy.
Absolutely. And the reason why I'm a big fan of what you guys invest in is because you specifically focus in on US manufacturing as well
Mhm.
as food and produce, right? Which are the essential goods that are the foundation of this great economy. So if you want to start with the one strategy that you feel like is the most foundational, right? Let's go ahead and kick it off there.
Yeah. So, we carry very low risk. A lot of times in our meetings, we are described as a bond wrapped in real estate. And the reason why, like you mentioned, we're US manufacturing, but a big portion of that is the strategy of having a sale leaseback transaction.
Okay.
So, what a sale leaseback does for the buyer, right? Which we are the buyer, our investors, our credit investors who come to us who want to invest alongside us, our LPs. Um, they want low risk, and so this provides a stabilized income producing commercial property because you're essentially buying back from either an owner occupied or either private equity acquired piece of real estate that already has a tenant in house, right? So this was something that I remember talking to you about, and it's like it's usually a moment where people are like, oh, that makes a lot of sense, because we're not hunting for a tenant. We already have a tenant, right? So imagine a scenario where you have, your great grandfather's factory has been passed down to you, and you're looking over the financials and you're like, you know what, I want to expand. I want to take that capital, reinvest it. So what I'm going take some capital and reinvest it. So what I'm going to do is the capital that I have tied up in this real estate in this factory, we're going to sell the real estate, not the operations, right? We're going to keep the company, and use the money that was tied up in the real estate to reinvest and grow our business, right? That's just an example. of
Mm.
why someone might need that, right? So there's benefits for the seller, there's benefits for the buyer, and it creates this sense of stability um, for everyone, right? And so
I
we'll
love
come
that.
in, yeah, and so we'll come in and usually set like a 15 to 20 year lease and hold for a fraction of it. And then, our strategy is to package up or to sell to an institution or sell one-offs um, after about 5 to 7 years in our current fund.
So what I'm hearing, right, when you talk about the sales leaseback strategy is I'm hearing low risk, I'm hearing bond wrapped in a real estate, I'm hearing existing tenants, right, and I'm hearing stability long term.
That's correct. That's correct. So that's, it's something that a lot of people don't think about. You want to get into real estate because you see your neighbor down the street driving a Ferrari and you're like, this sounds great. How do I get into commercial real estate? And then, you save up some money or find a group of people and you buy into real estate, but you don't have a tenant. That can be somewhat unreliable. So really
Mm.
us having the sale leaseback is a core piece of our strategy to ensure the stability, right? And then we'll come in the long-term lease, we'll put 2 to 3% annual rent increases. And, it's great. We have quarterly tenant financial reporting. We really keep up with them, and it's great for them because they can, expand, they can have debt retirement the um, for the owner who's selling the real estate to us.
That's fantastic. And is there anything else that you want to cover in regards to that strategy that makes it so robust?
Yeah, yeah, I would say, there's a lot of it has to do with being selective, right? So, if you were to look at us over like a 12-month period in our team, for every 1,200 new opportunities that we're looking at in real estate, we're only closing around 30, right? So there's a massive funnel. We really get specific when it comes down to actually acquiring and what we are looking for. Uh, and that really shows in our track record. We have an under a 0.2% default rate, and that's incredibly low among syndicators nationwide and non-dependent of whatever industry, whatever real estate industry they're in. And then of course you want to have really great relationships and to get these deals. So there's about a couple dozen industrial brokers and sale leaseback advisors nationwide, and we have really great relationships with them um, because we're quick to execute, and we're also a shop where we don't have 10 layers um, of decision making to get to an answer, right? So like when you are dealing with an institution, or if we're closing alongside someone like JP Morgan, then they might take a longer time or have a longer process and really getting the close. We're a
Mm.
quicker execution with our smaller team.
Right.
Small being around 30 people.
Hmm. Yeah, I mean, you have to play to your advantages, right? That's one of the luxuries is when you're not as big of a corporation, you can be more nimble, right? And you can fly and adjust and make pivots to certain ideas and strategies as opposed to waiting for the chain of command to go through, right? So that's great. And if we are solid here on the seller leaseback strategy, right? How do you add on to that so that the investment concept becomes even more sound?
Yeah, so there's a whole bunch of things we do. We have a credit review, so we'll evaluate the credits or the tenants' financial profile, their revenue, their EBITDA trends. Um, we'll look at their customer like concentration risk. So if they have a heavy amount of customers, or like Walmart sometimes does this, where they'll want to be like 80% of someone's customer base, and they can kind of do that to negotiate long term. So it's like a little secret of theirs that I got to learn in business school. And so we'll look for red flags like that to make sure that there's not one customer that these tenants in US manufacturing or food produce have,
Mhm.
where they could get the rug pulled out from underneath them. So there's things like that. Where we want to buy the real estate, we want the acquisition basis to be below replacement cost. So, we're okay turning away offers that don't fit in these brackets to make sure that we're going to be profitable at the end of the day, and so are our LPs.
Good. I mean, you have to be selective
Yeah.
and qualify accordingly, right? So that you have the best outcome for everyone involved. And then I think backstage we also talked about regardless, right? Because this is one of the biggest wisdom points that I've learned, which is regardless of whatever business you're in, right? That's simply the vehicle. But it's really important to recognize that at the end of the day, we're all in the people business. And I think
Correct.
you two great points around that you also wanted to share as well.
Yeah, yeah, and that's kind of what I was talking about when getting into our broker relationships is you want to have really great relationships if you want to get great deals. So, having that they come to us first, or we get, where we got fresh eyes on it, and before other people get to see it, and it really helps us get better deals than other people out there.
Yeah. So for you, how do you ensure that those relationships are robust and sound? Do you guys have a philosophy where you try to make all your meetings in person? I'm just kind of curious, like what do you do to go that extra mile, right? To make sure you stay in good graces with those relationships.
Yeah, well, I've gotten the pleasure to meet a lot of our brokers. I would say the relationships date back beyond MAG's formation, where, GPs were likely, they knew these guys and they kept in touch, and it's been like decades in the making. But one thing I've noticed is, we're like a family. We include our LPs, we include our brokers, of course, our team when we have our events. So we do our like a waste management Phoenix Open golf tournament where we'll take a suite in, either one of the holes and invite everyone and treat them. And it has a lot to do with relationship making. We're not necessarily there just to make deals. It's a lot about, how are you, how are your kids doing, and getting to know these people on a personal level. Um, and it's really easy to, because a lot of times they're really kind, they're really fun, and incredibly intelligent, and great people to know, right? So, I guess on the getting to know people and being personable note, I would say just, be open, be yourself, authentic, and you'll get that from a lot of people, and that's how you can build and keep relationships on a real level and not just a business one.
That's right. No, absolutely. I'm totally in agreement with that, as that very much, I would say, reminds me of what we do here at Lightspeed Investing as well. And in regards to the team aspect, how do you go about, how, I guess, finding and retaining great talent?
Yeah, that's a good question. Well, personally, I'm part of the talent, and so I don't do any of the hiring.
Uh-huh.
Uh, but we are very selective. We typically have like things like trial periods where they'll come in, and we'll see how they fit as part of our family, right? So like we'll have our own little like group chats, like we'll have like a health and wellness group chat, even though, we're all industrial or all real estate focused and very much so a finance company, right? So it's like not necessarily have anything to do with health and wellness, but just because we care about each other and our health, we'll have like things like that. So if we find people who are, intelligent and they fit in, and they can bring an angle. So sometimes we'll take people from private equity firms, even though we're real estate based, because, we're still dealing with tenants, we're still dealing with financials, and having a fresh eye is really important for us. We have all different backgrounds and ages, even in, the small group of 30. And we just want to make sure that they're a good fit and they feel like they're at home. And that was a part of my own process was, I got to go to some of the events and talk to some of our investors, get to know the team before I actually started on to MAG.
Wow, yeah, that's got to be huge. Did it require a lot of travel? Because I know for you guys like to host events between Dallas, California, and also like up north, right? Maybe like Phoenix, something like that.
Yeah, yeah, all over the place, really. Those are some big locations for us, but we have investors in the Midwest, so sometimes we'll go out and do like a cool conference out there. We have folks in New York. We do some things in Miami, so there is a lot of travel, but we also try to spread out our capital markets team just enough where, those bases are covered and we get to have some face to face with investors. I have an investor of mine and he's an incredible guy in a lot of our deals and very happy. And he calls me and I pick up the phone and he's like, you always pick up the phone, and I'm invested with a lot of syndicators. I mean, he's well into retirement. He's a full-time investor, right? So we're not the only shop that he invests in. He's like, you guys are the only people who pick up the phone. And that is just, it's a small thing, but it's a
I love
key.
that. I love that. I'm very big on phones as well. Now you're not going to get me in the mornings because I'm more so afternoons and evenings. That's my operational hours. But we are very big on the phone. I'm kind of my business partner and I are very much old school like that, as opposed to just always relying on text. And it's important, you definitely need that personal connection to just keep your clients feel reassured and taken care of. So
Yeah, course. You don't want any, and back to when we were talking about strategy, you don't want anything to pop out that they're not, expecting, right? So, key part of our strategy, and I like to say like it's very stable, it's like a bond wrapped in real estate, is you want to have fixed debt. I mean, depending on your model, but you don't want to get caught in this variable debt where, you're one day at 5%, now you're at 8% or whatever, that's just an example throwing out there, exaggerating. But that I've seen situations where that happens because, even a few percentage in real estate can be big in your margins. And so that few percent in debt might be why your distributions pause, right? So when you're investing with a syndicator, you don't want someone who's not paying attention to fixed debt. Another thing is, if something happens to the real estate, who's responsible for that? So we have absolute triple net lease, which means the tenant takes care of the insurance, they take care of, everything, anything that could go wrong with the real estate. If the roof crashes in, they take care of it, right? So it's on them. And so that's also another thing. We don't have that any expected expenses come up. And and that is a key differentiator as well.
Yeah, no, and that's so important in regards to making sure that you have all those things in place. Now, Nicole, obviously, in terms of the investing realm, there's three main segments of investing that I always say to pay attention to, right? There's the barrier to entry, there's the runway or time frame, and then the most important and exciting aspects, the ROI. So even though you are referring yourself to a bond wrapped in a real estate, you guys actually promise more, I would say ROI, right? Because a typical bond is plus minus 5 to 10%, right?
Yeah, yeah,
The,
yeah. And
the,
that's with the good faith of the government, right? So it's backed by the good faith of the government. It's not really backed by, anything. We like to say a bond wrapped in real estate because it's incredibly stable, right? It's very, you can expect, you know what to expect. But you also have real estate as collateral, where in a bond, you kind of have just like a good handshake, right? And like good faith, right? So that's why our relationship's very important, and our strategy is very important because people have trust in us, they have faith in us, and then they also really believe in our mission, our strategy.
yeah. And you guys are offering what, 17 and a half? Is it
Yeah. So
guaranteed,
that
never fixed?
Yeah, our target for this fund is 15 plus, 15% plus IRR. Our average annualized return is 17.5%. So we do underestimate a little bit, I'll say that, on our projections because we want to over deliver. But realistically, you could expect, north of 15% on these. And these are assets that are distributing from day one because you have a tenant, your expenses are fixed, right? And so you're not looking for a tenant, you don't have any, downtime in terms of, when you're getting cash flow. And so when your money gets to work the first day, you're immediately accruing your pref rate from the cash flow of the tenant paying the rent, right?
And what is the minimum? Is it 50 or is it 75K?
I believe it's the entry is 75,000 for the fund. We have a direct and a feeder, which I won't get into, but essentially, it is tax advantageous. So you can either get 20% reduction on QBI, or you can get bonus depreciation, which from my understanding, it looks like Trump's big beautiful bill is either has passed or is about to. And so, if he does, then there's 100% bonus depreciation, which means you get to report the equipment in these buildings at as net losses.
Oh,
Uh,
nice.
yeah, which
Very
is
nice.
really, really nice for people for their taxes. It's one of the
Yeah.
asset classes that allows for that. Um, and so, there's a lot of good things about it. And the entry, you do have to be accredited. So if you have $5,000, $10,000, like I think your focus should be on to getting to that accreditation standpoint,
Mhm.
so that you can get the ability to invest in these types of alternative investment classes.
And once they have the ability, right, they're looking at 75K as the barrier to entry. The runway is 1 year, right? And the
Um,
R and the ROI is 17 and a half distributed quarterly. Is that correct?
Yeah, so with real estate, you're kind of locked in a little longer than you would be. So the liquidity standpoint is something that real estate is as liquid as, when you sell it, right? For the most part. Unless you're getting into tokenization, which is something that we're headed towards. Again, a conversation for another day. It's like block
Yeah,
it all.
that's a whole conversation by itself.
Yeah, but realistically, our timeline, if you're looking at this fund that I was kind of talking about, is you have about a 12-month period of investment where
Mhm.
people are investing, and then we close up the fund and we're closed for 5 years. During that time, you're getting distributions. So unlike private equity, it's not a J curve, which typically means you're not getting any distributions, and then all of a sudden you're getting, an exit or some type of
Mhm.
liquidity, right? You're getting distributions every quarter. And by the time that 5 years is up, you've already had half of your investment back in terms of, the just cash flow. And then you also get a profit split. So as a limited partner on this, you get a split of the profit that comes in. And so for each dollar, you can get, anywhere from 75 to 80% of that. So we call it a promote, 75-25 split or an 80-20 split.
I love it. I love it. Thank you so much, Nicole. These conversations have been very insightful and educational. I certainly learned a lot. And for those listening who may want to take advantage of the opportunities that your fund is offering, or just to learn more, what are the best ways to do that from your end?
Yeah, you guys can contact me with my email. It's Nicole, Nicole, at magcp.com. Or you guys can go to our website and fill out a contact form there, and someone on our capital markets team will reach out to you. And that's just www.magcp.com. And thanks for having me, Philip. This is really great. I loved talking about this, and I hope that, the listeners got to take something away from this, if nothing else.
Absolutely. Listen, it was a pleasure, and I look forward to seeing you in person at some of those events. As in the future, I'm very excited to share and announce that we will be co-hosting some events together with Mac Capital. So, Nicole, I hope you have a fantastic day, and we'll be in touch shortly. Okay?
Okay, sounds good, Philip.
All
Looking
right.
forward to
Thanks.
seeing you soon.
Absolutely. Thanks. Take care.
All right, bye.